Hello friends, continuing with the chapter of change in profit sharing ratio, we have one more topic in this chapter, that is revaluation of assets and liabilities. Revaluation of assets and liabilities. Right? Now what to do in this topic? As the name says, we have to revalue our assets and liabilities. Right? When we have to revalue? On the date of change in profit sharing ratio. On the date of change in profit sharing ratio we have to revalue all assets and liabilities. Right? On the date of change in profit sharing ratio, we have to revalue our assets and liabilities. Now the question is, why we have to revalue them? Why to revalue these assets and liabilities? The concept is similar to what we studied in journal reserve. What we studied in the reserves, the accounting treatment of reserves. The advice of a chartered accountant friend Z, that whatever you have earned before the change in profit sharing ratio, distribute that earning in the old ratio. Here also, why we are revaluing the assets and liabilities, that if there is any profit or loss on the revalue of assets and liabilities, that should be distributed among partners in the old ratio. Any profit or loss on revaluation, you can write this down. Answer to why, that any profit or loss earned on the revaluation of assets and liabilities before change in profit sharing ratio. Before change in profit sharing ratio should be distributed among partners in old ratio. That is why we are revaluing the assets and liabilities, so that there are no conflicts in the future, that on the date of change in profit sharing ratio there was an asset that was revalued, that should have been revalued, and there was a profit on that. Right? So the advice of the chartered accountant friend Z here also works, that anything that you are earning before the change in profit sharing ratio, distribute it in the old ratio. Clear? So if there is any profit or loss on the revaluation of assets and liabilities before the change in profit sharing ratio, it should be distributed among partners in old ratio. Clear? For this purpose of revaluation, we will open one revaluation account. for the revaluation of assets and liabilities, we'll open one revaluation account where all the entries relating to revaluation are done. Now see how the entries will be. We are revaluing our assets and liabilities. Clear? If there is an increase in asset is debited or credited. If there is an increase in the asset account is debited and the other account is credited. Now here we'll debit the asset by asset account, and which account will be credited? This revaluation account will be credited, right, for increase in asset. Clear? If there is a decrease in asset, then we will say to asset account, and in this case revaluation account will be debited. I'll say for decrease in asset. Clear? Now if I talk of liabilities, if there is an increase in the liability, it will be credited or debited. If there is an increase in the liability is credited or debited? It has to be credited to liability account, right? Whatever the liability is. If it is sundry creditors, we will write here to sundry creditors for increase in liability. Clear? Now if there is a decrease in the liability, then we'll say by liability account for decrease in liability, right? Now what we will get is, we will get the balance of revaluation account. What this balance reflects? This balance reflects either a gain on the revaluation of assets and liabilities or a loss on the revaluation of assets and liabilities. When will there be a gain? If the asset is more, liability is less, right? If the credit side is more than the debit side, we'll say to gain on revaluation. Now this gain on revaluation will transfer to partners' capital accounts. We'll distribute this gain among the partners in their old ratio. Here we'll say partners' capital accounts. If the debit side is more than credit side, that means there is a fall in the assets and increase in the liabilities. If there is a loss on revaluation, we will say by loss on revaluation, and this loss will be transferred to partners' capital accounts. In this case, partners' capital accounts will be credited, and in the case of a loss, it will be debited, right? So this is how you will prepare the revaluation account. If you are asked for the journal entries, you can prepare this revaluation account in the working notes, and from there you can pass on the journal entries. What will be the journal entry for increase in asset? Asset account debit to revaluation account. For the decrease in liability, we have liability account debit to revaluation account. For decrease in asset, we'll say revaluation account debit to asset account. For increase in liability, revaluation to liability account. To transfer the gain or loss on revaluation, we will say the revaluation account debit to partners capital account, or in case of a loss, partners capital or current account to revaluation account. You have to prepare this revaluation account, and from there on you can easily manage the journal entries. Clearly, right? So this is about the revaluation of assets and liabilities, that on the date of change in the profit sharing ratio we have to revalue all the assets and liabilities. The question is, why we have to revalue? Because if there is any profit or loss on the revaluation of assets and liabilities before the date of change in profit sharing ratio, that should be distributed among partners in old ratio, right? As per the advice of the chartered accountant friend Z, anything that you are earning before the date of change in profit sharing ratio, that should be distributed among the partners in old ratio. Clear? So for that purpose we will be preparing the revaluation account. This is how we will be preparing the revaluation account. The assets, for the increase in assets it will be credited, decrease in liabilities will be credited, decrease in assets will be debited, right? On the debit side we will show, just remember the journal entries. Increase in asset, asset will be debited, then other account left is revaluation account, that is to be credited, right? Everything works on those three rules of journal entries. Remember those, and you will be able to prepare any account, you will be able to pass any journal entry. Clear? So on that logic only we will prepare the revaluation account, right? After the revaluation account we can prepare a balance sheet of the new firm with the new assets and liabilities figures. How we will do that we'll see in the next lecture with the practical problem on revaluation of assets and liabilities.